Wall Street commits many sins, but these three really get to me. They affect a lot of people like you, so I just want to talk about them. First sin is the fact that you cannot just trust the majority of those analysts out there. So, if you're not familiar, in many transactions, right, in the public market, many people rely on the analyst's opinion to guide them through what is a good investment, what is a bad investment, right? Because you can only track so many stocks, you can only track so many companies, you can only dig deep into so many companies. So you have functional analysts within specific industries that can go and provide you with their commentary, and if you trust them, you make an investment decision based on it. But the truth of the matter is, only about 5% statistically of analysts issue sell rating. And what it means, sell rating essentially means that they're suggesting, hey, this is a bad stock, you should not invest in it. Somehow, in the entire market, only 5% of them turns out to be bad investment. And if you dig deep, it's not that deep in terms of like understanding the issue around why they're so conservative, because you can see it over here in this article that I kind of like pulled up, right? There obviously the banking conflicts, which we can skip for a second because we're going to talk more about investment bankers in a second. Access concern and career risks are the two primary ones that continuously come up from what I've seen from even the people I've met in my life when I was in finance back in the day, is that they're just afraid being cut off from the access to the information if they get too negative. And to me, it's like defeats the entire purpose of why would you go to the analyst in the first place. You want them to provide you the truthful, trustful information, trusting. Yeah, information you can trust. But instead, if you know that they will not risk their own career, they will not say something negative in public about some of these companies because they're maybe considering one day moving into that space, or maybe they think that because this company will be mad at them, all other companies in the industry will be mad at them and they'll lose access to the information, right? Or people move around and maybe the executives in this company next time will be executives in the other company, and again they will cut off their access. So there's so many reasons, right? And the other one is that there is scene. Yeah, I also pulled up and kind of like showed an interesting part about how there are some comments about those same analysts publicly saying like, hey, this is a great investment, but privately telling to their investors, if they have a fund, hey, you should stay away from this stock, right? Like this is the kind of whispers you hear behind closed doors, where in public, if you catch them on camera, they're always going to be super positive about that investment. And what I wanted to bring up is this scene from Big Short, one of my favorite movies, just in general, but also specifically on the topic of like finance, investments, and those kind of things. And you had these two characters, Jamie and Charlie, forgetting their last names. They essentially run this small fund, and they discover that there's a lot of fraudulent activities around this investment vehicle. And so they run, I think it was his brother-in-law, cousin-in-law, in the Wall Street Journal. Obviously cannot pull up the scene because it's going to get copyright strike. But they essentially go to that journalist and they try to convince him to publish a story about how all of this is fraudulent. And the guy refuses. He's at least one of their relatives, but he just refuses. And he's like, hey, I built these relationships, I built my career on Wall Street, and I have those connections. I'm not going to jeopardize them, so I'm not going to report on the fraud that's affecting millions of people. And that's true. Like, again, obviously I'm pretty sure that's like a made up character, but I'm pretty sure that's how the conversation would go if you would discover something that fraudulent that affects a lot of people for, say, a big company. Then those individuals would be like, hey, I don't want to touch this story because I don't want to be affected. So it sucks. It's something that bothers me. And even to this day, when I sometimes hear those analysts go either on the TV or on some podcasts, you can see how they dance around the topic. You don't have to look into it too deep. Whenever you listen to the next podcast or the interview with some of these analysts, watch how, if the company is underperforming, how they dance around the topic and how they're like, yeah, but the macroeconomic effects are really like hitting them. It's not really blah, 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 blah. Or, oh, I really trust their executives are so smart. They have such a smart executive team. They're going to figure it out. They're going to be fine. They're always running this defense play for these companies, and it's just, that's where, like, whenever anytime now I hear some sort of like just purely analysts talking there about the stock, in the first few minutes you can clearly tell how truthful they are. In the majority of the cases, as I said, they'll just be too afraid to talk negatively about the market. Hence, you cannot trust it's anyone who's making decision based on their recommendations making the right recommendation and making the right decision. But also, you cannot trust their recommendation, in my opinion, unless again it's someone who you caught saying the truthful things about negative outcomes for some of the companies versus being continuously optimistic and always being like this cheerleader for every single company out there, or 95% of the companies out there, based at least on the statistics that we saw earlier. The second sin is all about coming back to the investment bankers. How, and again, there are a lot of negative things we can say about the investment bankers, but the primary one here that I wanted to bring up is really around the whole like SpaceX situation, how like it showcased a lot where traditionally investment bankers should be out there helping with the price discovery, right? Like they're the companies that go out there, work with the companies that go public and say like, hey, here's what realistically you can achieve. What is your predictions? What is my prediction? Let's compare the notes, because then I'm going to underwrite it, right? And I'm going to be helping you go and sell institutional investors, sell public on this idea, because I'm going to give you my validation, my brand name as a validation, like, hey, this stock is really worth this much because we did our due diligence. In the case of SpaceX rolled out there and they said, hey, we're going to have a market of whatever, 29 trillion, 28 trillion or so, and we're going to really take it over, and we're going to send people to Mars, and we're going to have the data centers in space. And Goldman essentially was there like, yep, we agree to everything. Yep, we're going to tell our associates to go and write whatever case they need to write to confirm it. Where just, you don't even have to be major in finance or strategy or operations. You don't have to have a PhD or MBA. Like, you can understand how, like, by just like reading a couple of pages of that prospectus for SpaceX, you realize like they have nothing. And I made the whole entire video. If you're curious, check it out. A few weeks back I made an entire video on the SpaceX IPO, and I went through the prospectus and I went through some of the major points that they use to justify valuation and how easy it is to break them apart. And Goldman, I'm sure they have people who are way smarter than me in a lot of these areas. They were like, 2 thumbs up, buddy. We're ready. This is the worth of the investment. Go sell it at $135 per share, right? Because they just wanted the fees and they wanted their name associated with the largest IPO in history. That's it. And it's like, again, not like I had a strong positive opinion about Goldman Sachs in the past. I've met enough people from the company. Some were pretty nice, but majority, you kind of know the quality of the talent. You're like, yeah, I don't have high expectations because I know I've seen it firsthand, so to speak, the level of experience that you have out there. But at the same time, just like seeing stories like this and being like, what are we doing here? Right? Like, we all should be smart individuals who are trying to provide good, intelligent information to the broader audience who are not as informed and as educated maybe as we are, right? And you go out there and you basically BS your way through just because you want this happen for you, right? Again, I get it. That's the world, and it's not the first or the last thing that happened with the investment banking like this. But it just annoys me when people put up their appearances and they say like, "Hey, we're these experts and we're like the staff validators of truth of the financial information," and you just accept anything and everything just for the sake of this kind of scenario, right? So again, just small things that annoy me. And the third one, yeah, that's actually was the number 28.5 the trillion, what they had. I built it up over here because I was like, oh, if I'll forget the number. But the third one is kind of like ties now those two stories with the story of the fact that like a lot of the young generation, right, that's coming up online right now are really like not even seeing the issue with this. They just simply don't trust, or they think the people who are touching this kind of analysis are not necessarily as aware as they are about where the market is or where the puck is going. So they really just invest based on their feelings and not necessarily the fundamentals. And if you've been on my channel before, you know I have a beef with this for a long time now. How like whenever I see people trying to justify the valuation of the company based on the vibes, it's just like I hate it, and I'm a big believer in looking at the fundamentals, if not for purely like this is exactly pharmaceutically grade data that I'm going to use to evaluate the company, but at least understanding how realistic other things that they're promising are based on what they've achieved so far. And in this case, to me, what concerns me is that with this increasing number of people who now have very easy access to become a retail investor, right? In the past, you need a broker, you need to sign up with a brokerage, you need to have like minimum balance there, a few $1,000s at least, and there's a person who advises you to all of this kind of like decision making. Today you just install an app and you can transfer like $100 and you can go and bet on a few companies. And this is my concern, is that this is how these individuals see it. They no longer see it as, hey, I'm trying to park my money in a trusted fund or trusted company that I know will gradually grow and 10 years from now will help me afford my kids' college tuition. They really looking at it as like a betting market, right? It's another betting market. It's another which one of these companies will pop and give me 400% return next month. It's not, oh, will this company grow at 5% to 10% rate and outpace the inflation so my money will be protected, right? It's no longer the case. And this was my challenge and an issue also walking, as I mentioned, the SpaceX IPO, is that how much of an attention they try to gather from the retail investor, because the smart money, a lot of major investment funds who are really taking fundamentals into account, they look at the SpaceX and they realize for what it is. It's a borderline fraudulent, allegedly, offering, right? They don't have the business behind what they're trying to justify in terms of their valuation. So they just said, no, we're not touching it with a 10-foot pole, we're not investing in it. So they knew that this is going to be the case, so they went hard after the retail investors and they said, hey, we're going to give bigger portion of our IPO to the retail investors, because we know they're not going to do the research. We know they're probably investing in us just purely because they expect this pop and they hope it's going to be in hundreds of percent points so they can at least afford something that they cannot afford right now. And people are disillusioned with the industry, with the system. People are disillusioned with their career prospects, so they're going to just gamble their money away on these kind of bets. So if they're not betting on horses or they're betting on sports teams or prediction markets, they're here betting on a stock, right? And that's, to me, is a challenge, because again, coming back to my point earlier on about the analysts, not everyone has time that they can invest into understanding how the markets move or where they go. And this is where, and it's not financial advice to you, but whenever someone would ask me in the past, like, hey, what do you think about where should I invest, right? Easy answer in the past was always like, hey, index funds. But also now with the whole, again, SpaceX will be a theme for a little while, with them being included in the next like 15 days into a lot of index funds, like I cannot even recommend that anymore. Maybe S&P, because S&P said that they want SpaceX to be proven valuable enough to be included in S&P, but it's only, I think, in the primary one, S&P 500. Some of the other S&Ps were still included, so it's like, it's messy. I cannot even recommend it. And so remove the index funds out of the picture, the real one that I've been using in the past, and I said, hey, invest in the public market only in the companies that you really understand. You understand the market, you understand the industry. Maybe not necessarily you have an insider knowledge, but you just understand enough the business that you're investing in that you can predict how well they're going to perform. Because my hope is, vibes aside, fundamentals will still remain one of those important metrics, because when things will start crashing, right? When the whatever bubbles will pop, when the whatever rosé glasses will be taken off the faces, and people will stress sell and try to find a new investment, they will come back to fundamentals, in my opinion. They will be looking at, okay, which companies actually strategically sound, operationally sound, profitable, that will survive any kind of like turmoil in the economic environment, and the money will move back in those spaces, outside of where today I feel like they're more in this speculatory environment where people bet on bitcoins, people bet on the markets, people bet on certain stocks to pop, right? Like, they're not focusing on fundamentals, they're just focusing on a bet that can give them a quick buck, versus long-term investment outside of, again, those who actually spend time in the industry or have brokers or work with companies that help them invest and manage their funds, right? Which is very few. It's like probably point something percent of the entire population, and everyone else kind of like have to decide for themselves. And this is where I hope that maybe a video like this, if you've never thought and considered this kind of things, will give you a little bit of a extra context for how you should really be thinking through some of these investment decisions, and not, again, just trust some analyst, trust some investment bank, or trust your vibes to just help you make the right decision. So again, this is just a mini rant, just something I felt, especially as I was looking at all of these like IPOs that are currently in consideration for the summer, at least some of these three main ones, which I have a lot of questions about. And I look forward to reading the prospects for Anthropic and OpenAI, and see how many pictures they're going to start with and how many fantastic stories they're going to tell that will have zero foundation. Anthropic, maybe less so. I'll leave you with this potential prediction. Anthropic, I'm curious about, because I trust there to be something going on where I'll be like, hey, I can actually hang my hat on this. OpenAI, I fully expect it to be SpaceX level prospectus, with a lot of promises about glorious big future with little to no actual plan to execute on it. So we'll see. Maybe I'll eat my words and turns out both of them are like that, or OpenAI somehow develop an amazing business model that I'm not aware of. I'll see you next Saturday. Peace.